Endowment funds. Gotta love them, endowment funds. Well, let's see what we've got here. Endowment funds account for the assets a not-for-profit organization holds that provide income for it to sustain itself. All right, so lots of not-for-profits, especially these universities, have, gosh, I gotta tell you, I've worked in the private equity world at PwC. It was a wild time. They have so much money. So if you're ever thinking, should I give my university, some money, or should I give it to someone in need? I would go with the person in need. A lot of these universities have, multi-billion-dollar endowment funds. It is out of control. So these assets may be those with or without donor restrictions. So what is the life of these assets? How do we treat the restrictions? What are some of the accounting treatments that we use for these funds? Well, the life of endowment fund assets, these are basically just big investment accounts. So I'm a super wealthy person, or even I'm just graduated and I give the university $10. Either way, that money is put into a big investment fund, given to a fund manager, and then you get your accountants like your PwCs and Deloittes to come in and audit and do the taxes for them. So we're not seeing the big bucks there, but who are seeing the big bucks? Those are the fund managers who take your $40 billion Harvard endowment fund and they just keep growing it and growing it and growing it. And basically they'd never have to collect revenue again, never have to collect tuition if they have never wanted to ever again. Asset restrictions. So endowment funds are commonly established by a donor restricted gift. So if they give you $1 million, right, that could start an endowment fund if one didn't exist before. Board designated endowment funds. So the board could say, all right, so remember this is board designated, not donor restricted. So for these funds, the board, which is an internal restriction, designates some of these assets that it has without donor restrictions to generate income, generally in perpetuity. Meaning the board says, all right, here, BlackRock, you're going to invest this money and make us a bunch of money with all of this $40 million over and over again each year and keep growing it. Now, donor restricted, these are the most common. The donor might say, here's $1 million for your endowment fund. You can grow it, but I want you to use it to pay the tuition of some underprivileged students. Cool. These funds are not generally, but they are externally restricted by the donor that stipulates investing the money in perpetuity or for a specific term. All right. So the term endowment, I believe I skipped over this. Endowment funds are seen both established in perpetuity or for a specified period of time, which is known as the term endowment, right? So your endowment lasts, generally they're going to last forever until maybe it runs out of money. Hopefully it doesn't, but it'll last forever, or maybe it is for a specified period of time, like 20 years or so. Just depends there. 2 more slides, everyone. Keep with me. Stay strong. We are almost done here. Take another stretch if you need. Go for it. So as mentioned, there are 2 classifications of net assets for a non-for-profit organization's funds based on donor restrictions or lack thereof. So we could have net assets with donor restrictions, donor restricted endowment fund, and then here is net assets without donor restriction. So this is just a board designated endowment fund, right? Because there's no donor restrictions in number 2. So the board is doing its designating, right? But keep in mind when that's important and when it's not. So first one, this is with donor restrictions. So donor restricted endowments accounted for under net assets with donor restrictions. Nothing groundbreaking there. Here's an example. So Harry graduated from State University and made it big. Good for Harry. Good for you, Harry. We're all proud of you. He decides to give back and donate $3 million to the university, which is a non-for-profit organization. He included the stipulation that the principal would not be spent and that earnings from the donation would be used to fund the career placement office. Well, giving back, helping people find jobs. I'm glad to hear that. This donation would be reported as an increase to net assets with donor restrictions and would represent a donor-restricted endowment fund established in perpetuity. Awesome. This is a clear example of how we're going to use our net assets with donor restrictions in a donor-restricted endowment fund. What about without donor restrictions? Well, net assets without any externally by the donor, externally imposed donor restrictions, but with internally imposed board restrictions would be classified as net assets without donor restrictions. Now, is there ever going to be something without donor restrictions and without board restrictions? Probably not. The board's going to just say what they want to use it for, and we'll just assume it's got board restrictions on there. So that's just kind of the treatment there. We're not going to really consider without donor restrictions and without board designations. This is really just our second category. So the governing board of state university, the same university there is a not-for-profit university, decides that the sports fields of the school need improvement. As a result, the board restricts $2 million of its net assets without donor restrictions to be invested for the next 5 years with related income to be used to repair the sports fields. These funds would be accounted for as net assets without donor restrictions and would represent a board-designated endowment established for a specified period of time. This is an example, again, of what we're going to see if there are net assets without donor restrictions and the board gets their hands on it to designate it for a specific purpose. And that is it. Let's wrap it up with a nice summary.